Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
So we are 1 week away from Tech Week of earnings season, the crown jewel of earnings season. Last time, 3 short months ago, the Tech posted earnings and we rallied 13% right afterwards. Was that a celebration of good earnings or relief that they weren't bad?
Neither, actually, Jim. I think it was anticipation of good things to come in the fourth quarter, which I could believe we're going to see in a matter of weeks now. Also, though, to your point, I think it was a little bit of a relief rally in the fact that we had seen a really rough summer, inverted yield curve and so forth, and tech came through okay.
Okay, so in a matter of days, we have Amazon, Apple, and Facebook all the 28th, 29th, and 30th, and Google on the 3rd.
After the end of the month, yes.
If they disappoint, is it enough to knock the entire broad market rally off the rails?
Yeah, you better believe it, because this market is priced to perfection, Jim. And we talk about this week after week on Market Movers. This market needs really good news to keep going. It's been getting it, but this is the big period of time for me coming up.
Now, before we dive into our trade discussion, I'd like to point out that these trades are examples, not recommendations or advice. When we price these out, the NASDAQ was trading about 92.30, we'll call it.
92.30, Jim.
Yeah.
So as we approach 10,000, I mean, it's unbelievable some of these levels that we're seeing in the NASDAQ, and reasons that I think it's a little, at least possible to be a little bit more constructive on how we express ourselves going forward, as well as maybe to be a little bit cautious too. So specifically, Jim, as an example today, I'm buying an end of month 92.50, 9,300 call spread for 25 ticks. Seems pretty fair, right? This trade expires on Friday, January 31st. It risks 500 to make potential $500. Yes, Jim, I know you love it, but I'm going to pay for this by selling, yes, a similarly positioned end of month 93.80 call for, you guessed it, Jim, you're so smart, 25 ticks. So therefore, my outlay is zero going into this. My risk, though, becomes unlimited if I'm getting short at 93.80, if the market blasts through there on some of the earnings that you talked about earlier. You mentioned the underlying at 92.31. It's a way to kind of express yourself bullishly, but at least maybe have a caveat in there in case the market does not go up there and therefore you're protected a little bit.
So the thesis, we'll call it a call letter. Buy a call, sell a call, sell a call.
Yes.
The thesis is if we rally, it's going to be somewhat of a contained rally because we're toward the end of a long rally.
Yes.
But if we break, we could break hard, in which case you lose nothing.
Exactly, and that's the protection there in the sense of at least we don't have an outlay to pay for the call spread with respect to that
It's
sell
oddly
of the call
so
higher.
it's cautious, but again, you risk being short at 93.80, so it's
true.
not cautious if it gets up there. So okay, that's interesting. I'm looking at it from a different perspective. Like I have Apple, I have Amazon. Those stocks have done unbelievably well. I look at this earnings season, and I think it would be prudent for me to cover some of my risk, to mitigate it. So
Sure.
I'm going to use a put spread, despite the fact that you know I'm still bullish. But I'm going to look at a put spread in case things go badly.
I would
during
never
that
think
binary
otherwise,
event.
Jim, of you.
So I'm looking at buying the January end of month, the same expiration year as the 31st, 91.50, 9100 put spread. Now this is a hedge. Now this, you know how bullish I've been.
Very much so,
And I'm
Jim.
long Apple and I'm long Amazon. And if those stocks rally into this, I'm participating on the upside. But when it comes to a binary event like earnings season, things could move drastically in either direction. So I'm laying out 12.5 ticks. So it risks $250 to make a potential $750 and expires on the 31st, right after all those
Yes,
reports.
a very fair risk and reward, Jim, for some protection, as you noted. And I like the levels, too, because those are levels to me that could be support and therefore resistance if they get broken, similar to my call spread and certainly the call I sold to pay for my call spread, Jim. Those are levels that you can possibly manage, too, if you put on these examples, to where if the market does move one way or another and you don't like it or do like it, you can put some different levels in and see how that works out.
Last quick question. How hinged is tech still to trade talks now that phase one deal's done?
Very much so, in the sense, too, I think economic data, because a lot of just the growth and a lot of the MOMO, if you will, Jim, is in tech stocks.
Right.
So depending on what those exogenous events are, that'll affect tech first.
Thank you for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.